Our Alpha Manager for the day is joining us. Shibani Sircar Kurian is Senior Executive Vice President and Head of Equity Research at Kotak Mahindra AMC. Shibani, hi, good afternoon. Thanks for joining us. Now that the earnings season is over, what's been your key takeaway and, what's your call on the market now?
Hi, good afternoon. So firstly, talking about the earnings season that has gone by. So overall, the numbers were fairly decent, if one must say so. However, the miss at an aggregate level has been largely because of higher than expected contraction in terms of margins. So the margin pressure has clearly been visible in the first quarter, and maybe some of that will flow through into the second quarter as well. But the good news is that commodity costs have also come off, and therefore second half of the year should see better outcomes for margins as a whole. So on the aggregate, if you look at for the Nifty, the downgrades have started. However, the downgrades were not significant. So in the range of maybe 3 to 4% in terms of Nifty earnings for FY23. So earnings growth, if you look at the range of beats and misses across stocks, that was fairly large. The way we are looking at markets today is that, especially over the last 1 to 1.5 months, we've seen a significant up move in the market. That has been led by three key things. One, of course, some amount of FII flows coming back. Secondly, expectations that margins start bottoming out in Q2, especially given the kind of trajectory on commodity price. And third, India growth looks fairly robust on a relative basis. However, one must also remember that in the near term, given the fact that we've seen this up move, valuations both on an absolute as well as relative basis are now looking somewhat stretched. Especially India's relative valuation in the emerging market context has gone back to all-time highs in terms of the premium that India trades at. And therefore, near term, one could see some degree of either consolidation or volatility. In the medium term, especially second half of the year, if the commodity prices remain stable or come down from current levels, India's earnings growth trajectory, especially into FY24, should revert back to mid-teens kind of a number, which is a fairly decent number in the global context. Now, the way we have approached markets this year has been bottom-up, and that approach continues at this point in time.
Got that. Shivani, hi. Good afternoon. You said for FY23, Nifty earnings estimate, according to you, is, did you put a number there?
No, so we've not put a number as such, but what we have seen is if you look at consensus, post the first quarter, we've seen a cut in terms of consensus numbers to the tune of about 3 to 4%. Most of the cut has come from a few sectors, which includes IT, pharma, and to some extent commodities. While if you look at sectors such as financials, for example, financial earnings growth was fairly strong, and we've seen earnings growth largely being supported by the sectors such as industrials, financials, even going into FY24. So that's how the earnings season has panned out.
Sounding cautious. I mean, we had Nilesh also with us earlier. I mean, there is, you guys are a little cautious, right? Given the valuations that you explained.
Yes. So that's what we are really saying, that, the move in the market in the last 1.5 months has been pretty sharp. Now, while the medium-term outlook remains fairly strong because India's growth in the relative context, especially where emerging markets and global context goes, remains fairly robust. But near-term, slightly cautious given the fact that valuations now, especially on a relative basis, are back to all-time high levels of India's premium valuations to the emerging markets. And that's what the near-term view comes through. Medium term, especially in the second half of the year, we believe that the focus for Indian markets will shift away from inflation, closer towards growth, and that's where India is an outlier. But this market this year will continue to remain fairly bottom-up in nature. So that's how we are really approaching the market, rather than being very broad-based in terms of how we are looking at the market.
All right. Hi, Shivani. Bottom up, there are plenty of opportunities out there, I'm guessing. And, these new age themes, they caught everyone's imagination. The street was abuzz when the markets were zooming. Some of the stocks, they corrected to half of what they were. Some of them are a third of what they were. A couple of names like a Zomato, after correcting, the stock is up close to around 50% or thereabouts. Are you looking at some of these new age themes, or do you believe there are better opportunities in the market that you'll rather focus on?
So if you look at, Nigel, hi, good afternoon. If you look at the way we have looked at sectors, there are 3 or 4 key sectors where we have been fairly positive, and this has been our view for a while now. First and foremost, we have played the manufacturing industrial theme in our portfolio, and that is a theme in terms of the growth outlook as well as the trajectory of policy push. We believe that that theme continues to play out. The second has been banks and financials. Again, we have started seeing signs of credit growth pick up and it becoming more broad-based. Valuations in this segment look fairly attractive. And we're looking at names which have strong capital, strong return ratios and valuations being reasonable. The third aspect that we've looked at has been the auto segment, and that's a segment especially in the passenger vehicle space where we have been positive. And fourth has been real estate and home building, where again we believe that growth trajectory remains more structural. Now, coming specifically to your question in terms of some of the new age companies, we have been even last year cautious in terms of how we've approached the companies. What we have done is that we've looked at each company on the basis of 2-3 key parameters. One, the competitive positioning of the companies in the segment that they operate in. Second is how easy is it for incremental competition to come in and what is the moat that the company has. And the third and most importantly has been capital allocation policies of the company. And therefore, while we would look at some of these new age companies in terms of the current valuations, we would still be fairly selective in terms of the stocks that we pick in the segment.
Okay, you spoke about home building as a theme. Within that, would cement also be included, because that's also seen some bit of life of late?
Yes, so cement has been a sector where we've been positive on. Of course, the sector has seen a fairly sharp impact because of higher input costs, and that has played out in terms of margins. Also, we are now in the monsoon season, which means that pricing has been fairly muted. But what we believe is that cement remains a proxy play to infrastructure as well as real estate. The second factor is that the sector itself has seen fair degree of consolidation. We believe that players, unlike fears that there would be a lot of pricing-led market share moves, but we believe that players would by and large be rational in terms of how they approach pricing. So that's our overall thesis on the sector. Also, if you look at the quarterly numbers, volume growth has been fairly stable and has actually surprised on the upside. And therefore, we believe that going ahead, there should be some amount of demand recovery led by housing, which leads to improvement in terms of utilization. And as that continues to play out, we also believe that pricing should remain stable and input costs coming down would help in terms of margins. And finally, of course, valuations are fairly attractive in the space.
All right, Shibani, we'll leave it there today. Thanks a lot for joining us. That's the word from Kotak AMC. The market, by the way, is attempting another sort of move up, and this time it's been led by the Bank Nifty. Just look at the Bank Nifty. It's seeing a bit of a surge now, almost 1% move happening on the Bank Nifty. That's moved to high point of the day, and a lot of individual names doing well. Kotak Mahindra Bank in particular stands out. We'll take a break. Up next, we'll connect with Nimesh on the dealing room check, D-Street chatter, and of course BTST calls also lined up with Mitesh.